Good afternoon. I'm going to explain to you how I made 3% in one day, or essentially one day. We can call it that for the thumbnail and title. It might be spread across 2 days. But anyway, we closed out of them yesterday to secure the 3%. So I'm going to explain to you how we did this. So we had a couple of different positions open. So we had one on oil, a one on pound yen, and that's essentially where the majority of the gain came from. So you can see we had a position here, but that doesn't actually contribute to the 3%. The actual results we're talking about is this position here that we can see where we opened a long position on WTI oil, crude oil, US oil, whatever you want to call it. We closed out right before we had this drop to the downside. And to be perfectly honest, I'm actually not sure what drove this, but I put a tweet out saying discretion can't be taught. Now, sadly, it's true. I don't believe you can teach discretion very well. My camera's freezing again, which is a bit frustrating. However, this trade is very simple. It was a case of trading it from the pivot point, which is this grey line. We bought, the momentum was to the upside. We obviously had rate cuts, which is positive for oil. So generally speaking, this trade was kind of a no-brainer, really. So we bought it and closed out at R1, or what at the time was R1, right here, this first red line. And then we had this drop. And I was thinking, okay, well, I'm still bullish on oil. Oil still, has all of its bullish factors. So why would I not look to buy again? Buy cheap, essentially. Buy low, sell high, as they say. So what did I see here? Well, when we look at this grey line, which is the pivot point for yesterday, we look down, we've got S1, S2, and S3, which is this bottom one. Now, S3 has a 90 something, it's like a 95% chance of being rejected, essentially. And you can see that came into play here. So this is the way that we can use statistics in our trading. So obviously price didn't quite come down to S3 right here. So I bought in a little bit early and I said, okay, if we do reject S3, I'm going to add in again. And if we don't, that's fine. I'll take the loss. And, I'm playing the statistics here. I'm happy to take that loss for that 90% chance that we do get the rejection that I'm looking for. And then we rejected and I closed out and took profits. So this trade was, I think it was around 1 to 2% roughly. It was obviously a very small sort of scalp, but now I'm looking at it. I really wish I held this move. Would have been great. This would have been a sort of a 10% trade if I did hold it. But we follow the rules. We trade as we do. So this is 2 wins on oil in the space of 24 hours. And then we had another great trade on pound yen. And again, this one is just trading these pivot levels. So you can see what we had. A really nice rejection here. So we had this break and retest. So you can see there was a resistance back here. Drew up my lines and then we rejected again. And then we closed back inside of this daily pivot level. We also have the momentum to the upside. We have the bullish EMAs. And then I decided to buy. We had a very minor little bit of drawdown here, but nothing major. Just rejecting this 200 moving average again and then heading back up to the upside. And again, we took profits maybe slightly too early here, but we still secured the win. Now to prove this, I'm going to show you my FX book. I'll refresh it so you can see it's real. It's completely, not fake. You can go and check this link if you want. So this is a very small account. You can see there's nothing here to rant and rave about. However, the reason that we use this account is because it's the master account. So this isn't my personal account. It's not a business account or anything. This is sort of the main account where all of the trades are mirrored to other places, whether it's our investors, our PAM clients and things, and even some of our personal accounts. So this is what we use essentially. And of course, we've just made this my FX book to sort of prove profitability. I know it's a big thing. So, I run a signal service. So I think it's only fair that I do something like this and show that we do actually do what we say. And, I run around saying we average sort of 2 to 3% a month. So here I am to prove it. But anyway, we did actually have a little bit of a rocky start to this month. So you can see our P&L peaked at negative 2.44. So this was sort of the worst drawdown we've had so far, obviously, since the start of September, which wasn't anything crazy. A negative 2.44% drawdown isn't huge, but it was still some drawdown. And then we obviously realized some of this drawdown and sort of peaked at around 1.5%, 1% roughly. But you see the win rate's nothing fantastic. We've got 35% losses, 65% wins. So obviously we do have positive win rate over 34 trades. But yeah, a majority of this month was pretty break even to losses. And then all it took was a couple of really nice trades to push us up into a really nice, profitable way to end the month. We do also still have some pretty good positions on. Now, again, you got to keep in mind the percentage and not the actual capital amount. So this is roughly 1% in profit. So we could realistically end this month in around 4% profit if we play it properly. And that's if we close out now. If we let these trades run, as I imagine they will, we could even end up with maybe a 5% month here. So what I'm doing here, the reason I'm showing you all this is because I'm showing you the realistic side. Now, I'm not saying that every month I'm going to gain 3% or 5%. That's obviously not realistic. Unfortunately, I wish I could. However, what I am showing you is how easy it is to get out of a difficult position. Now, of course, as I said, the 2.44 isn't anything huge. It's pretty easy to get out of. But it would also be very easy to start panicking and say, okay, I've got, like Don Vo did. I'd say, oh no, I've got 10, 20 people on this account. They're all down 2.44% because of me. I need to make this back and start over trading and losing. But that's not what professionals do. That's not how you conduct yourself in business or in trading. So we take it slow, we take it calm, we follow the rules, and we play the statistics, and we end up in quite nice profits. Now, again, small account, but it's not the account size, it's the percentage that matters. So you can see the metrics here are all pretty positive. We obviously are down in pips because pips are priced differently on different assets. So it's not really a huge deal. Don't really care about that too much. So yeah, we'll see how this goes. I'll keep you updated. You can obviously track this account if you want to. It's public, so no stress there. But yeah, I hope you guys have a great day. Thank you for watching. I hope this may have cleared up some of your questions or whatever you may have. But yeah, so far we are in quite a nice euro dollar short. This is again just playing some statistics. Price opened below the pivot. The trend here, the momentum is to the downside. We've created this level of structure through here that could get rejected here. So I'm just looking for a small sort of 1 to 2. We're also in some, silver. We're in oil and pound Swiss as well. So that's an update. You can see actually there's a loss here on euro dollar that was pretty nasty. When I say nasty, it wasn't actually as bad as it looks. It's because we were dollar cost averaging with low lot size positions. So you can see all of these short positions we took. We actually just got a sell entry here on Golden Gates, which is nice. But yeah, we had to realize this loss during FOMC, which again is completely fine. You can see I've just shown you the MyFX book. This loss wasn't horrendous. It wasn't anything to worry about. It's just it looks a lot worse than it actually was. But yeah, that's the reality of the way I trade sometimes. You can see now we've just got this arrow ping here, so it's a nice confirmation to hold this position to the short side. But yeah, anyway, have a great day. I will see you later.